Hello there, welcome to another video on investing on the stock market. Today I'm doing another why I'm buying video, and so today we're talking about JPMorgan and Chase. Ticker symbol JPM. It's my only bank holding. I hold this stock myself, and I'm just gonna talk a little bit about why I hold this stock. So just quickly before we start off, JPMorgan does $100 billion in revenue, massive bank, has $2.5 trillion under management, and was established in 2000 after a merger of two smaller banks. It's one of the world's largest banks, so it's the 9th largest bank of any, and it's one of the most reputable and stable ones. So whenever people talk about JP Morgan, it's usually in a positive light, and this bank carries a lot of weight and respect around the world, and it's truly a global investor. JP Morgan is a massive investor in a lot of countries. Big network. So I personally want to hold one US bank. US has the best banks. If you look at bank stocks in Europe and China, they're all over the place. Banks in Europe have done very poorly since the recession, but the banks in the US has done fine. They've consolidated a little bit, but they're doing really great. The banks are not very leveraged, and they're looking very, very healthy. And the US economy is the best one, and it recovers the quickest. And when the economy is doing well or is recovering, the banks are also doing well because interest rates go up. Now, so they have 2.5 trillion under management, 25 billion in cash, and 36 earnings before tax. These are important numbers for banks, by the way. So this is the best of any of the major big four US banks, which are Citi, Wells Fargo, Bank of America, and JP Morgan. 10% return on equity, 3% net interest margin, which is the margin on all the money JP Morgan has invested, and 68 book value per share. So these are important numbers for banks. Book value per share is, if the company goes belly up and they have to sell all the assets, liquidate everything, this is what you're left with. So for every dollar invested, you're left with $68, which is quite an important number. These are all also the best of any of the big four banks. I believe one of the other banks has the same return on equity and almost as much cash, but JP Morgan doing really well here. There are a bunch of other numbers you can look at. It has a very stable management. See the financial crisis. JP Morgan did the best of any of the banks, and they even had to bail. They had to buy another bank. They bought the assets of Bear Stearns. So JP Morgan actually had to help out during the financial crisis. So great bank. Of course, it took a hit like any other bank, but less of a hit, and they helped out. And now they're doing really well on all the financial crisis stress test. And the stock also has pretty much the most stable history. Of course, apart from the financial crisis, this stock has done very, very well. No big crisis to speak of, like internal crisis, like Wells Fargo. Pays a 2% dividend and has shown a steady and consistent history of increasing the dividend yield since 2000, or actually 1998. The dividend increased every year until the crisis, then it dropped down, and then it has increased every year since. So this dividend is not going anywhere, and if anything, it's going to increase. And 2% is pretty good. Most of the banks do pay more than 2% or 2%, but I'm not going to pick the bank with the most dividend. I'm going to pick the bank I think is best, and then the 2% dividend is just a bonus. Pooh, you get cat hair on my nose. They have the most widely respected bank CEO in America, CEO of 14 years, Jamie Dimon. You've probably seen this guy's face all over the news, especially now that he's talking about cryptocurrency. But forget the cryptocurrency. That has nothing to do with Jamie Dimon. He's one of the 100 most influential people in the world. He's been like Forbes Business Person of the Year, Best CEO of the Year, He's ranked in all sorts of lists. He's widely respected. Very little bad news about this guy. And if you stay on as a CEO at a major US bank for 14 years, that means you're very smart. You've done a really great job and you haven't had any big screw-ups. Think about how quickly bank CEOs change and how quickly they're fired. You know, because these are banks and they have people's money. And if you screw up at all, you're done. Your head's rolling down the street. Jamie Dimon's still staying on. And on top of that, he owns 6.8 million shares of his own company. Jamie Dimon is the only bank billionaire CEO because of his stock in JPMorgan. And of his wealth, which is about 1 billion, I think, those shares, 6.8 million shares of JPMorgan bought over a long period of time, are worth 734 million US dollars. That's a pretty cool amount. And he keeps buying. So this just shows how much he believes in his company. Of course, most CEOs own stocks of their company, but bank CEOs are not known for being major shareholders. This is not like Jeff Bezos or Bill Gates, who are the majority shareholder of their company and they have tens of billions of dollars in stocks. I haven't checked the numbers, but I bet you that Jamie Dimon, such a cool name by the way, it should be spelled Diamond. He owns more shares of his company or more dollar amount worth of stock of his own company than any other bank CEO. So I think this is a great story. I'd really like to hear you guys' opinion on the other banks. You know, if you own Bank of America, Citigroup, Morgan Stanley, Wells Fargo, you know, why do you own those banks and not JPMorgan? I would love to hear some arguments. What do you think about JPMorgan? Any shareholders out there? And I will do a stock showdown with banks and gaming and all of that good stuff coming up. So as always, I'll see you guys in my next video. Drop a comment if you have questions or subscribe. See ya.